Can we go to the main call, sir?
Yes.
Ladies and gentlemen, good day and welcome to VST Tillers Practice Limited 3Q FY26 post-result conference call hosted by BNK Securities. From VST Tillers and Tractors Limited Management, we have with us today Mr. V.T. Ravindra, Managing Director, Mr. Anthony Cherukara, Chief Executive Officer, Mr. Nitin Agarwal, Chief Financial Officer. At this point, all participant lines will be in the listen-only mode, and there will be an opportunity to ask questions after the management presentation and the opening remarks. Over to you, sir.
Good morning, everyone, and happy to take you through the details of our performance for the last quarter and 9 months so far. Safe harbor statement. Moving forward, I'll be sharing with you the key highlights, sales volume, financial performance, and awards and recognition, some of the details of the awards and recognition that we have received in the past 9 months and the last quarter. Key highlights of our performance. We have had the highest ever turnover for 9 months, achieved 912 crores against 693 crores last year 9 months. Highest power tiller sales in 9 months, 55% growth over the last year 9 months. 63% growth has been achieved in power weeder sales as well at 8,399 weeders against last year of 5,142 numbers. We have turned around the domestic tractor business with an 18% growth. I'll share more about it in the coming slides. We have had improved cash generation of 108 crore this year. And as I said, for the 9 months, we have had the highest turnover. Also for quarter 3, we have achieved rupees 314 crore vis-a-vis 219 crore of previous year quarter 3. Moving on, coming to the 9-month sales volume, power tiller we have grown by 55.1%, 37,374 power tillers against 24,100 power tillers the previous year. Tractor domestic 3352 against 2846 of the previous year with a 17.8% growth. Export has been a bit down at 886 against previous year of 1151 with a minus 23%. We expect to gain back something in the quarter 4 on this one. Power weeder 8,399 against 5142 of last year, so it is registering continued high growth at 63.3%. Power reaper 3305 against 2246 of last year with a 47.2% growth. Moving on to the sales volume of quarter 3, power tiller was at 12,545 against 6,775. Of course, that was a lower base last year with the sparsh issues causing cash flow problems in the SFM business. Tractor domestic again at 32% growth has shown good growth, and like I said, some more details here. We are in the process of launching new products. In fact, in Q3 we had not yet launched all the new products, and also revamping the VST Z-Tor tractors. So this growth is without those volumes having been plugged in yet. So going forward, we should be able to register growth in this segment continuously. Tractor export, we kind of reduced the negativity which we saw in Q1 and Q2 in Q3, and Q4 we expect to catch up further. Tractor export was at 320 against previous year of 382. Power weeder, we have again doubled the volumes in quarter 3 at 3,429 against 1,652. And power reapers, it's a seasonal business, of course. In quarter 3, typically tapers down. We did 1,793 against 1,614 for the previous year quarter. Coming to revenues, 9 months performance on revenue, we are at a 32% growth at 912 crores vis-a-vis last year of 693 crores. On operational EBITDA, which is inclusive of the provisioning we have done for the new labor code, is at 13.1% vis-a-vis last year of 10.2%. Now with on PAT, we are at 100.7 crores against last year of 69.5 crores. Coming to Q3 performance, the revenue is grown by 44% at 314 crores against last year of 219. Operational EBITDA at 12.9% against 8.9% of the previous year, and PAT at 30.7 crores against a lower base of 1.7, wherein the previous year we had some mark-to-market losses in the said quarter. Some of the awards and recognition, happy to share that we've won Design Excellence Award. We would like to elaborate a bit here. This shows the strength of the R&D that we have been working on for the last 4-5 years, the competency that we have developed, and we have won winning awards now on the new range of tractors which is coming in from the VST stable with a completely newly designed engine which is fuel efficient, and torque max, that is phantom fuel efficient and torque max, and also with the range of electric weeders which is also in the process of launch in various markets, and you will see those figures coming in Q4 slightly, and mainly in the next financial year. Happy to share that I was also awarded as ET India's Impactful Turnaround CEO. We've won several awards on the design front at the Global Design Summit. We also are working on several productivity improvement measures, wherein we also won the Jury Challenger winner in the Challengers Trophy competition organized by CII, and several other awards as well. Thank you so much, and we'll move on to answering the queries from here.
Yeah, thanks, sir. We will now begin the question and answer session. For participants who wish to ask a question, I request you to please raise your hands. Alternately, you can also type your questions in the chat box. We will wait for a moment while the question queue assembles. Yeah, first question is from Shreyans Gathani. Please unmute and ask your question.
Morning, sir. I had a few questions. So, the first one was if you could comment on, the marine engine entry that we saw. What is the plans there, and what kind of market we are targeting? If you could just give some color on that.
Yeah, quite frankly, it's very initial days in that segment. We wanted to take an exposure. We believe there is an opportunity there in terms of providing our compact engines, especially on fishing trawlers and the small boats, not necessarily as an outboard engine, but an inboard engine which occupies lesser space. So we have tied up, created the complete drive system for the boats, and this was our first kind of exhibition that we participated in to kind of make our presence felt in the market. It's very initial days, so we don't have any numbers as yet, but we feel this is a good opportunity we will pursue going into the future.
Got it. So, just trying to understand what the size of the market is, in terms of numbers, what target market we are looking at.
The segments are very varied, so I won't be able to give you a size unless the segments are very different, from large fishing trawlers to very small fishing boats, luxury boats, yachts to very small power boats. So we are learning more of it, and you will hear from us more about it in the coming quarters.
Got it. Okay. So my second question was on the new launch of products. So the Phantom series, I believe we've already launched in the quarter that went by, right? Or was that not the case?
We have just launched in one state, which is Gujarat. So
Okay.
now we will be launching in Maharashtra, which is the next place we will be launching, with Gudi Padwa coming next month, and then go on for launches in all the other states in the next financial year.
Okay. And that'll be the same for the Zetor series also?
Yes, Zetor is a complete revamped series now we will be launching, because we have been seeding in the last 1 year or so, and now we have a complete revamped product. So that process of relaunch is happening in Q4 to begin with in March, and then going forward into the next financial year.
Got it. So, and my last question is on the commodity prices. So, are we taking any price corrections with the rise in the steel prices that we've seen?
On ferrous metals, the fluctuation has not been very high, or the increase has not been very high, so nothing is happening on that front. But on the copper, it has been pretty steep, and in some of the areas, especially in radiator, on a particular model that we use a copper radiator, otherwise it's aluminium. Only on that front, so it has not been material at this point in time.
Okay, okay. And on the electric tiller and the hybrid product, if you could give some color where we are on that.
Yeah, so like we said in the last quarter, we are introducing electric power weeders and electric power tiller. So we would be starting to seed them in this quarter. In March, we should be able to start seeding them in the market and scaling up steadily based on the response from the market in the next financial year. So it is going as per plan.
Got it. All right, that's all from my end. Thank you.
Yeah. Yeah. Reminder to participants, if you want anybody to ask question, please raise your hand. In the meantime, I'll just go through some questions in the chat box, sir.
Yeah.
Sir, tillers, we are seeing some good traction. So, what is driving this, and is expected to sustain?
So, like I've always said, the largest segment of farmers is small and marginal farmers in this country, and we have had a normal year this year. There is nothing significantly happened that this volumes. It is not that some extra order, special order, or some government order came in for this volume growth. It has been a normal year with normal rainfall, normal everything, and hence this growth, which we always said will happen in this segment, and we expect this to continue. However, as I said, this is a very sensitive segment. If there is issues in rainfall, if there is issues in uh, liquidity, which we saw the last financial year, wherein the spur scheme kind of stopped everything, that will definitely affect. But the potential doesn't go away. This continues to be a great market, great potential, and 80% of Indian farmers are in this segment. It is not in 80% farmers are not tractor buyers. In fact, 80% farmers are looking for small and affordable solutions, and that is what I have been always saying, that this is the segment to watch out. This is the bottom of pyramid potential that is available to us, and I think that is the reason why you see power tiller has been growing. And also, more significantly, I've said this before, the power weeder segment will continue to grow and even grow faster than this going forward, because that is even more affordable for the small farmer. The price points are much lower than even the power tiller, and hence it will continue to grow. And I don't see this growth stopping anytime soon.
Thanks, sir. Next, Mr. Arjun Khanna, you can unmute and ask your question.
Hello, am I audible?
Yes,
Yeah, you are.
Yep. Thank you for taking my question. So I would like to just start with extending my heartfelt condolences on the passing away of Mr. V.K. Surendra. So we all have had a privilege of meeting him in AGMs and in office, and obviously his dedication, integrity, soft-spokenness, and the values he's embodied have left a lasting impression on everyone. So just wanted to start with this. Coming to the questions on the company, sir, given that the international tractor business, we have seen slight weakness, and India has signed a few international trade deals, especially with Europe and US. How do you see this pan out in the year ahead? Is there scope for revival out here? Obviously, Europe will probably take a year for it to fructify, but are there any advantages from these deals accruing to us?
Thank you, Arjun, and definitely I'll convey to our current chairman, Mr. Arun Surendra, and he's not in the meeting today, but I'll definitely convey it to him. Going forward, I think Europe has tremendous potential. We have always believed in it, and that is the reason a couple of quarters back we said that we are now working towards establishing a base in Europe, with our ground operations starting in Europe. So far, we have been trading or rather exporting from India to our distributors in Europe. That had its own challenges with all the conflicts going around and the logistics cost and the time required for logistics varying through the year and creating complexities for the distributors in terms of cash flow, in terms of working capital involved in the business and the rotation of the same. So first is we are establishing our base in Europe. Hopefully, first quarter of next year that should be up and running. Second is we are studying the EU FTA. All the details are not out. It should benefit us in some ways. The taxation difference is not much because the tractors aren't taxed much in the European market. But there could be other benefits in terms of putting our people on the ground, in terms of easier visas, employment possibilities, which will help us scale up our operations in Europe faster. So we are working on it.
Sure. So we were planning on launching platforms for the US. So is that on stream, or had we delayed it given uncertainty on the USD?
Like I've said in the previous meets or talks that we have had, the product development was never stopped. So it continues because we believed that the tariff will go away one day. However, today it has considerably reduced and it's feasible now for us to enter the US market. So like I have said before, in 2027, we will enter the US market. But all of us know it is a very volatile situation and things change every other day. So we are hoping things now are stable going forward.
Sure. So my next question is on the power weeder business. So we were setting up manufacturing capacity. You had mentioned we have now assembly operations of 10,000. Given that we are scaling up, are we looking at more launches, increasing the size of manufacturing for us?
Definitely yes. The answer is definitely yes. We would be scaling up the power weeder business considerably. We are almost, by the end of this year, we'll be close to doubling the business from last year. And this growth will continue because the base is pretty large, like I have been saying all the while. And we will definitely look at options because we will have to look at new manufacturing as our capacities are slowly getting completely utilized.
Final question, sir. What's the capex for next year? How much do you envisage spending in FY27, both on R&D and on physical capex?
See, the cash outflow on capex, we expect next year to be around 60 crores. And the commitment will be even larger because we will be looking at some long-term projects. The technology projects continue to happen in VST. We are becoming a end-to-end enabled on becoming a internal supplier of engines and also looking at opportunities outside. One of the opportunities we were looking at is marine, and going forward we look at the opportunity of becoming an aggregate supplier in a big way. So that investments will continue. So the commitments will be much larger, but the cash outflow on capex will be around 60 crores.
Sure. And this includes our product development R&D. That's over and above.
This will be some amount of it will go into the global tech center that we are developing. Also,
right.
A portion of it will go into product development.
Sure. Thank you and wishing you all the best.
Thank you.
Thanks, Arjun Tanna. Anybody has a question, please raise your hand or type in your questions in the chat box. In the meantime, Mr. Shubham, you can unmute and ask your question.
Hello, am I audible?
Yes.
Hi, sir. Congratulations on good set of results. My first question is on small farm machinery. I just want to understand when you say there's a big headroom for you on growth in power weeders and power tillers. Just want to understand on market size. How big is the small farm machinery in market when you compare that with tractors and tractor implements? And where do we see this market to grow in next 5 years?
See, we have to talk about potential here because the industry, since if you look at it won't be very substantial at this point in time. the tractor industry today is at about 1 million. The number of households involved in farming in India is about 50 crores. And now if I take all the tractors get hired to 5 farmers at least, which is not the case because many of the tractors run on commercial use. But even if I say that every tractor gets hired, it's about 5 crores that, or 5 crores households that will get served. Still, there is about 10 crores households which won't have any sorts of mechanization. And with the large amount of uh, small farm holdings, this 10 crore households occupy, which will all need mechanization because the labor costs are considerably high compared to the previous years. So that is the kind of potential. It's the bottom of pyramid potential which is there, which is continuing to be high. Why is it growing now? Many reasons. One is the penetration of internet and information. Point number one. Point number two, the availability of finance, retail finance, which used to be zero, for example, for power tillers couple of years back. I'm very happy to say today our almost 12 to 13% of our business is retail finance for power tillers, which will continue to grow and kind of create capital enough for people to buy small farm machines. Third is government intervention and focus on small farm mechanization other than tractors. Government through its agri universities and Krishi Vigyan Kendras are driving mechanization in a big way, especially for small and marginal farmers. So multiple reasons why this segment will continue to grow, and that's the need of the hour, because if agriculture has to grow above 4% in India, the largest segment of farmers, which is a small and marginal farmer, their growth has to happen, and the government is completely focused on it, and we are dead in the center of this segment, and we expect that this segment to grow aggressively going forward as well.
Sure. Thanks, sir. And with that, would you be seeing any competition from Chinese imports or any other, import from lower cost territories or something?
Power weeders, for example, I'll tell that. First, okay, let me tell about power tillers first. So, power tiller, no Chinese imports are allowed. So, we don't expect that to happen at all. Now, coming to the power weeder segment, today there is still large imports of Chinese equipment. But what we are seeing is with the manufacturing of power weeders in India and better quality products reaching the small and marginal farmers, they are adapting it faster and with more trust on the brand like VST. They are coming forward because we offer a 2-year warranty on these machines, which the Chinese do not offer. These things are creating trust on the brand, and hence we believe going forward, based on reach and coverage, if we can reach and to every small farmer in terms of establishing a counter in every taluka, we will be able to penetrate this market and the growth will continue. So the Chinese influence will diminish over a period of time.
Sure. And there are a few global brands, right, which are still there in India and been a bit on a bigger scale in small farm machineries. So how do you see that competition laying out for you?
There are 3 significant players, if I can name them. There's a German player. There is I would say a
Japanese
Japanese player. So, but I don't see them really, and most of them are still importing from China as well. So I don't see them able to offer the same trust and the warranty and all that we are talking today, and which we are offering today to the farmers. And that is why you see 107% growth in Q3, for example. And I don't think this is accidental, or like I said in the beginning during my presentation, I said it is not accidental. It's not as if the government suddenly gave, some special scheme. Nothing has happened. It is normal growth. It is regular growth. As we penetrate more and more into the market and make products available at taluka level, that I think that is the key point. If we can reach, because for these products, the farmers are not going to travel to the district headquarters. They will go to the nearest counter and buy. And that is where VST is focusing, how to get to his village, how to get to his buying point, and deliver the product to him with a 2-year warranty, with the service available and the spare parts available. And the third point, which I said, spare parts availability, that is one big point against the Chinese players, because the support and service is not available for those products.
Sure, sure. I'll just have one last question before I come back in queue. Just want to understand more from your distribution perspective. When you say you want to be on the last mile for a farmer, right? Just to get to his service on spare parts and a bit more nearer to him. So how do you want to expand your distribution? Would it be tying
Exactly.
in?
Yeah, good question. So, we have been depending only on our dealer network so far, but couple of quarters back, we started working on a distributor retail network also for these segment. That is a power weeder, brush cutter, chainsaw. That segment we have started working on a distribution retailer network. Today we have about 10 distributors. It was a pilot phase for us. We have about 10 distributors and about 300 retailers at this point in time, but we want to significantly scale it in the next few years.
Sure. And how many dealers do you have?
Today in SFM, we have about 650 dealers.
And this would be different from what you have for tractors, right? Because again, ticket size are a bit different.
Yes, yes. Yes. It is a separate channel.
Sure. Thanks a lot. I'll fall back in queue.
Thanks, Shubham. Next question is from Mr. Krish. Please unmute and ask your question.
Yeah, hi. Thank you for taking my questions. I have three questions basically. So I wanted to understand from a farmer perspective. You said in your SFM you are targeting the marginal farmers. So wanted to understand from the farmer's perspective, what is the advantage of buying a small farm machine rather than renting a tractor? And like also the second question is why enter the marine engineering market when you are specialized in the agri industry and have opportunities to cross sell there? Thank you.
Okay, so I'll answer the first question first. The small and marginal farmer needs a small machine instead of renting a tractor, primarily because the cropping season is limited. It's few weeks for sowing, it's few weeks for harvesting. Hence, when he needs a tractor, he necessarily doesn't get a tractor. Like I said to the previous question, that if assuming there is every single tractor gets hired also, you get to cover only about 5 crore households, but there are 15 crore households which is in farming, and around that means around 10 crore households do not have any mechanism to address with the labor cost going up. Today also they are relying on labor, but from 150, 200 rupees, most of the places the labor costs have become 500 rupees or 600 rupees, and in some of the southern states it's above 800, 900 rupees as well. So with that kind of labor cost, it has become unaffordable for a 1.5, 2 acre farmer to hire labor, and he doesn't get the mechanization or the tractor on time. And the third reality is there is unfortunately a caste system in India. We all know that, and some of the people do not get the machinery due to these circumstances as well, even though there are custom hiring centers. So all these realities put together, there is a huge demand coming up for small farm mechanization. And coming to the second point on marine engines, it's an adjacency for us. We have compact engines. There is no need for any separate capex required. We see this as an opportunity, and we are exploring it. Like I said to the previous caller, it's very initial days. We will see how it goes, and probably in the coming quarters, we will see how exactly this could be a future for us. Yeah, and the entire marinization is through a third party. So it is not that we are getting a capex commitment on this.
Okay, great. So if I could just squeeze in a last question, coming to the tractors industry. So VST, yes, it's 50 HP and below tractors is what we primarily sell. So wanted to understand what is the trajectory of the Indian market right now. What are the farmers preferring above 50 HP or below 50 HP? And what are your expectations of volume growth in the future?
Yeah, so I'll just give you a color of the industry first, then talk specifically about VST's role in this. So tractor segment typically is divided into up to 20 HP, 20 to 30, 30 to 40, and 40 to 50. And above 50 is very small uh, in terms of the industry size. And up to 30 HP is also only about 50,000 to 60,000. And compact tractors and total industry size up to 30 HP is about a lakh out of the 1 million, right? So the largest segment, which is almost 8 lakhs plus or close to 9 lakhs, it is between the 30 to 50 HP. And among these two segments, 30 to 40 and 40 to 50, the larger growth is coming in the 40 to 50 HP segment. So till recently, VST was playing only up to 30 HP. Now we have some compact tractors that we have launched in the 30 to 40 HP, and the larger segment, which is the growth segment, which is 40 to 50 HP segment, where we are working with Zetor, VST Zetor products are coming in. Typically, 1% market share in this industry is about rupees 500 crore. We are less than 1% market share today, but we strongly believe that in the next 5 years, we can definitely claim 2 to 3% market share. That is definitely possible in the next 4 to 5 years, and that is why we are confident that there is a good runway for growth for VST in the tractor segment.
Sure, sir. That's all from my side. Thank you.
Yeah.
Thank you. I will read a few questions from the chat box. Sir, on the subsidy, releasing of subsidy, what is the current status? Is there any challenges or now it's no, fairly better?
Subsidy is normal, continuing regular with the spur scheme last year, where they introduced a new mechanism of paying the state governments the central portion. All those things have been streamlined, so it's been regular this year, but not increased. It has been the same subsidy amount overall that has been coming. It has not been increased, so the subsidy allocation has been the same, but it's been more regular because it's become systematic. I don't see going forward anything happening to it, because the new budget also has not changed allocations. It has neither increased nor reduced the allocation. So I expect normalcy to continue. But in the first quarter of this year, we have some elections, state government elections, which could slow down a bit in the first half of the financial year, especially in terms of subsidy flow. Whenever an election happens, we have seen that trend is flows are stopped for a few months. So I think then it will regularize. But I don't see at this point anything which should hamper that, unless there is a new surprise that comes up.
Okay, sir. Mr. Shubham, you can unmute and ask your question.
Yeah, hi. So just my first question again would be, is there any subsidy on SFM side from government which is pushing more on SFM versus tractors?
There is no extra subsidy on SFM. That's the answer that I was trying to give in the previous question as well. There is no extra subsidy on SFM. It's a regular subsidy. It's become systematic, and it is happening on a regular basis. The focus definitely is of the government, as before. Even today, they focus more on the small and marginal farm.
Right. This question comes because we are present in both sides, right? The tractors as well as SFM. Just want to understand our positioning. Where do we want to
There is no extra subsidy on SFM. Nothing extra.
No, not from the subsidy perspective, but from the growth. Like we are present in tractors vis-a-vis TSFM, right? Both would be very contradictory at the simultaneous time.
So like I said, I gave you two answers. One is SFM is based on potential, and we are continuing to explore that potential. And like I have said in all the previous quarters, that this potential is large, and we are still scratching on the surface. We have more to do, lot of work to do on the ground, and that is what we are continuing to do. We will have to get to every taluka. That is about 6,000 counters is what we are looking at. To begin with, we are roughly at around 1,000 counters at this point. So we have to increase the number of counters 6 times of today to really penetrate into this possibility and exploring it fully. That is SFM. But tractors, there is a runway, there is an industry size. We are looking at how to get to 2 to 3%, 2% market share in the next 3-4 years. And I think that is something which we can definitely do.
Sure. One question is on manufacturing. You mentioned, right, the Japanese and German players are still importing from China, whereas we have laid our capacities in India. So, do you want to expand it going forward? How do you want to source your products?
Yes, we will have to expand it because our small farm machine factory based in Malur is running to almost full capacity now. So we are evaluating various options. Is it
What's the
better?
size of this capacity?
We are at about 70,000 in terms of installed capacity, but if you do a third shift, we can go up to a lakh
Okay.
of power tillers plus weeders plus reapers plus new products that are coming up, electric weeder, electric tiller, and all of that. So all of that put together, we feel that we will have to add capacity. We are evaluating whether it is putting all eggs in one basket or diversifying. We have never had a manufacturing facility in any other part of the country other than the south. We believe that it is time that we should look at having a factory somewhere in the north, somewhere in the west. So we are looking at options, but it's too early. I am sure in the next few quarters we will finalize on that.
Yeah, and are we able to achieve the cost parity with the Chinese imports? Assuming in weeders we are allowed to import, then are we at parity with them?
See, we won't. Let me be very frank with you. We won't be able to achieve parity with Chinese costs.
Sure.
That is very clear. But what we can definitely do is create more value for the buyer to buy from us. Provide him warranty, provide him service, and provide him, parts when he needs it. And I think that is what the customer values, and that's why he's buying from us.
Sure. So just want to quantify how much are we expensive than Chinese? Would it be in the range of 10,
It
15%?
depends on machine to machine, but roughly I can say we would be expensive by 15 to 20%, roughly.
Sure. Thanks for that. Just one last
And
question.
I'm comparing with the quality Chinese product. There are throwaway Chinese products as well. I'm not comparing with that.
Understood.
Yeah.
And one last question is on SMAMs, that submission on agricultural mechanization, when government is saying to develop custom hiring centers. So would that be a threat for us when hiring of tractors become a threat for tractor industry? Would that the same thing happen for equipment market?
Custom hiring centers has been around for the last 10 years.
Okay.
And it is not, every interaction I have had with the government, I have told them it will not work. The reason is simple, because all the farmers need the machine at the same time. The cropping season is given, like in a given geography, the sowing happens in a window. Everybody needs at the same time. And there is no way one custom hiring center can satisfy everybody. So that is a practical difficulty. And also I said there are issues, in various parts of the country related to, the economic strata, the caste strata, and all of that, which creates its own issues. So I think low-cost mechanization ownership or innovative mechanization ownership, which is affordable for the farmer, is what will solve, the mechanization issue for the small and marginal farmer.
Sure. Very well understood. Just one last bit. Are you seeing any pressure on your pricing and then margins going forward on the equipment markets due to competition or due to a bit of imports?
Not really because of imports, because we have already seen that when we got into the power meter segment 2 years back, we were actually late entrant into that market. We have been able to grow very significantly in the last 2 years. We have seen that, of course, there is a willingness to pay for a given product, we won't be able to price it beyond that, but definitely there is a willingness to pay for a good product, good service, and good trusted brand. So there is no real pressure in terms of fighting the Chinese on the price front.
Okay. So you are comfortable in maintaining your margins at this level.
Yes.
And how much that be? 30 to 35% on gross in equipments?
Varies between equipment to equipment.
But in blended terms, how?
Some new products will be lower, some old products will be better than what you mentioned, and overall we will be around that.
Okay. Sure. Understood. Thanks for answering my question, sir.
Mr. Saket, you can unmute and ask your questions, but there is a lack of time, so you can restrict your questions to one.
So, sir, just one question would be, first, what is the outlook for Q4? And second part would be, with the US FTA, the free trade agreement, and now even the American companies are looking to now import into India. So, would we be looking for some sort of tie-up, say, to either be their distribution partner or say co-marketer or something on that front?
I'll answer the first one. I think the growth will continue. We don't expect any problems in Q4. I think we are growing at about 30%, so we should end up the year between 25 to 30% for sure. Coming to the second question, EU FTA, I've already answered. There could be possibilities, especially because the taxation was not big on tractors earlier, so it doesn't affect that, but it could be helpful in terms of establishing our operations, employing our people down there on the ground, or kind of other taxation issues related to establishing a VST enterprise in Europe. Coming to the US, importing into India, the cost of those products are pretty steep, so I don't think there is any threat to the Indian farm machinery market from the US, and I don't see anything in particular as a significant opportunity at this point in time. But we will be open to that. If there is a real opportunity that comes up, we will take it with both hands.
Sure. Just a small follow-up, sir, for Q4. What's the outlook for tractors? Because tractors is kind of slightly behind what we have been guiding for H2. If I could look at the numbers, so any color on tractor, will it start picking up, and the exports outlook, sir, for Q4 and Q1?
Yeah, so cumulatively, tractor domestic plus export, I have guided with anywhere between 6,000 to 6,500. We will be meeting that this year. I am hopeful that we will cross the 6,000 numbers this year for tractors, and the growth will continue. So this will happen both on the domestic front, and we would be better off on international compared to the first two quarters in Q3 and Q4. So some of the negativity should be reduced, and we should be close to flat in the international business. But we could be slightly negative also. It's too difficult to say on that front. But we should be reducing some of the negativity on the international front. But going forward with establishing the Netherlands operations that we are putting up for Europe, we should be able to rotate faster and help our distributors in terms of cash flow for them. I think that will give us the much needed growth in Europe.
Sir, for exports, what's the breakup between, say, US, Europe, and rest of the world, say, keeping in view the full year FY26 guidance? So, what constitutes for what portion? Is it like Europe?
FY26 US is 0.
Okay.
Europe is 90%. Africa would be 5%, and rest of the world 5%.
Okay. Thank you, sir. Really appreciate your time. Yeah, I'm done.
Thank you. Do you want to make any closing comments, sir?
What is that?
No, you want to make any closing comments? I just asked.
No. Thank you so much for attending this meet, and look forward to meeting you the next quarter. Thank you so much.
Okay. We thank all the participants, and we can close the call. Thanks.